Guys, welcome back to the Capital Mindset Show. Today we're going to be talking about ConocoPhillips. All right, so with ConocoPhillips, what we're looking at here is one of the largest oil companies in my portfolio, actually the largest one, the other one being Gazprom. And the reason why we're doing this video today is kind of an update as to the position of the stock. And I thought I'd have to make an update basically to keep myself accountable as well. And what I'm doing here is I'm actually starting to trim the position. So for those of you who are kind of new to the channel, ConocoPhillips was the largest way in which I engaged in the oil trade. My initial position was actually purchased in November. Actually, all of the oil companies were originally bought in November. And I actually had a couple positions in oil. One of them, actually, to talk about my mistakes before we actually look at the success, was I actually bought Occidental Petroleum around the same time and actually sold prematurely to then buy more ConocoPhillips. Okay, I still did okay. I probably would have done better had I not made that change. But the portfolio still did, or that piece of the portfolio tremendously outperformed, even more than I ever thought. And the Gazprom position did really well, especially with the changes in the political situation. However, more so now, there's a little bit of uncertainty. I'm not selling the Gazprom position. I'm actually keeping that one. But I'm going to be discussing what I'm doing with ConocoPhillips, or starting to do, because I'll talk about the process. So basically, let's take a look at the price action of ConocoPhillips. And we can see here, my position has done tremendously well. And again, for those of you who haven't seen that video, I'll probably show the video here, actually. Let me actually show us the video. All right, so here's the video, and it was posted on December 7th, 2021. It was kind of just showing or talking about what happened, what was the trade, what was the idea of the trade. And the trade, again, was initiated before this channel was even launched, but it's done fairly well for us. And I can discuss a little bit about the details, but in this video in particular, if you're interested, you can check this one out, and it gives you a thesis or a thought process to the trade. It's quite interesting. I think it mends together classical investing understanding along with macroeconomics. And if you ever took macroeconomics in high school or college, you might be like, when is this ever going to make money? Well, here's an example when it made a lot of money, at least understanding macroeconomics, and as well as coming to some realistic conclusions about energy, et cetera. You know, it turned out really well. Okay, so, but strictly thinking about ConocoPhillips, because that's what this video is about. Well, what I'm going to be discussing today has been the game plan that I'm going to engage in going forward. Okay, so I'm going to be taking some profits. That doesn't mean I'm going to be liquidating. So I'm up over 300% in the position, and I'm looking to actually just take some risk off the table with regards to this position, not take the entire thing off, and then actually shift it into other positions. Okay, I am pretty cash heavy or cash equivalent heavy. For those of you who may or may not know, I am nibbling and buying into Facebook here. I'm buying more and more and more Facebook. I'm kind of waiting for it to, as it comes lower, I think the pessimism can increase or accelerate, and I'll take every chance I can get. But I don't like to buy the full position ever at the beginning. I like to just go in piece by piece by piece. And I'm going to make a video about that because there was a good question on the last video about how to strategize that, because I think it's very important for people to develop that skill set or that strategy, because it's also equally as important as picking good companies, picking out how it is you're going to enter those companies. Okay, so I think without further ado, I think we can just get into the model and kind of look at what's going on. So let's pull up ConocoPhillips. So ConocoPhillips is actually rated as a buy by the analysts. Oh, that's actually really interesting when analysts and I kind of are thinking maybe the same thing, because their buy price is about where we're at now, and that's a 2.9% assumed upside. And the problem with this, and actually I'll discuss this once we start plugging numbers into the model, is the model is going to lack the human understanding of nuance, right? And so this is actually where I will stop here and say, this tool, which again, this will be available on the new website when it launches. This tool is that it's a good tool, but it's still just a tool, right? It cannot make someone a great investor. It can really help them. And if they understand the nuance, the accounting, the finance, that's hopefully what I try to provide little tidbits here in these videos, at least in my opinion, that can help someone. This can help you along that journey after you have that skill set, but it will not transform someone into a fantastic investor. Okay, and then let's actually plug it into the model to actually, or plug some growth rates to see what I'm talking about, right? So let's throw in a growth rate of 10%. So 10% might seem quite modest, right? It might seem that, oh, that's so easy for them to hit that, right? And it does, but it makes certain assumptions, and those assumptions are that the price of oil will remain where it is today. Okay, and then I'll kind of echo back to what I was talking about earlier, right? In that previous video that you guys, I recommend you guys go see. It explains it in greater detail. But for the most part, the supply crunch that's occurring within the energy space is causing the price of oil to rise, right? And will that continue? I don't know. Well, because the United States right now is technically how we consider it offline, right? The United States was the sleeping giant that awoke in around 2015 in regards to energy production. But then since about 2020, 2021 has been taken kind of offline. CapEx in the energy space has plummeted because sentiment's been driving lower. And then that was really good for the large oil companies, right? And so you would have made a ton of money had you invested in those. Okay. But now we're in the present. Okay. So what's going to happen going forward? The past is the past. So going forward, I'm not so confident that that will occur, right? We have a lot of changes perhaps coming in the coming days or coming weeks or coming months, coming years. And for example, this administration has shown signs of actually changing their stance. And actually they're going to try to perhaps get that oil production back online or encourage more capital investment, because now inflation has become a talking point for them, or not talking point, but a point of concern in order to achieve re-election, for that party, et cetera. And that again is a going concern for me as an oil investor, because I want them to keep doing what they were doing so that I can profit more. Okay. But unfortunately they may stop doing what they were doing, and I might not make as much money. So I have to think about that. And I know it's counterintuitive because you think, they'd be the enemy, but they're not. But anyway, that's not what this video is about. So if I put in these growth rates, right, it doesn't seem like I'm demanding a lot, and it says the model's telling me it's a buy, right? And then immediately I go, it's a buy, right? Not so fast, because now we have to understand the economic backdrop. Well, will these prices continue? Will these margins continue? Because let's take a look, for example, at the key ratios, and I'll just pull up, show their margins here. So their operating margins have maintained steady, right, over time, and their net profit margins, right, in 2019 were actually in fact negative, right? And then all of a sudden we see it rise to 16.71. This is not updating. This should have been updated. It should be about higher than that. But the numbers, basically, you can kind of see the story. It actually got worse in 2019, and then kind of subsequently rose again. And then also you have to consider on the absolute basis, it rose quite drastically. And actually this number should be a lot higher. Okay. And the gross profit margins have been rising. Like we see 2019, they were terrible. Okay. Let's take a look there, because everyone knows 2019 was kind of deflationary. So, just talking about that. And the cash flows were pretty good, actually. If we look at the free cash flow per share, it always traded decently cheap, except for 2019. 2019 was not a good year for ConocoPhillips. That was, I think, there was something going on with ConocoPhillips in 2019. I forgot what it was, but earnings quality was pretty good throughout the board. We take the absolute value of the negative and then we make it positive, and it's still above 1. So very good. Everything looks good there. Oh, and by the way, this is the crazy part. So when you saw it in 2020, you actually were buying it below book value, which was pretty awesome. So that's another tidbit there. And a company like this, I do actually take into consideration the book value. Most companies, and a lot of companies, I don't really consider it too much, but in this case I do. So again, what this model is lacking is the nuance that prices may not remain where they are. But if you've been invested in this sector, congratulations. This is what investing is all about. Now is the time to perhaps think about, and I'm not saying follow me. You got to think about it for yourself. But for me, I'm thinking I'm going to take profits off the table, de-risk the position a little bit, not sell the entire thing. I'm going to let some of it remain. For example, if I liquidated about 50%, I'm still taking all the money I put down and then some, right? And then I'm taking that out. ConocoPhillips, for example, also for the most part, is in a tax advantage account. I think, close to 50% of it is in a tax advantage account. So currently, all the sales I'm going to make are in the tax advantaged account. And then even though the others, right, I'm just not selling it to incur those taxes, but all of it is still right now under long-term capital gains. So I'm going to be good there. And I live in a state that doesn't give out the extra taxes. So, a little dig there. But I don't live in Puerto Rico, unfortunately. I should go live in Puerto Rico. Anyways, so with that being said, that's pretty much it. So the model is going to tell me again, it's a buy. I'm going with the added context. I'm just taking off some profits here. And I thought I'd make a video and explaining that. Again, go watch that video if you guys are interested in the thesis behind why I made the investment in ConocoPhillips and Gazprom. Gazprom, I'm not going to do a video yet until something big happens because I got other videos to do. And but if something big happens, for example, Nord Stream 2, I know that there's like some political unrest going on in that area, but of the world. But it's nothing really too bad to make a video really about Gazprom just yet. But I'm saving that video for some time in the future. All right, guys. All right. On that note, if you guys have any questions about anything, go ahead and leave it down below. I'll try to answer it in a reasonable time. Again, it's been pretty busy at work lately, so I've been trying to respond as quickly as possible within at least 24 hours of a comment. But other than that, I'll keep grinding out these videos for you guys, and I really enjoy it. All right, guys, I'll see you guys on the next one. Bye.